Very good morning, members. I welcome you all on this Sunday morning for an important discussion on the New Companies Act 2013. Shortly, we'll have with us Mr. M.J. Joseph, Additional Secretary to the Ministry of Corporate Affairs, Government of India. Nevertheless, we'll start the program. I request our Vice President, C.A.K. Raghu, to please come and occupy the dais. I request Mr. S. Santana Krishnan, Chairman of the Company Laws Committee on the Central Council, to please come and occupy the dais. I request C.A. Nityananda to please come and occupy the dais. I also request C.A. Suresh Senapati to please come up and occupy the dais. Friends, as you all know that New Companies Act 2013 has come into its being after the assent of the President of the Government of India. Now the whole ministry is back to the working on the rules that are to be framed. As you know, this New Companies Act is more has got, instead of sections, it has been replaced with clauses, and it will be driven through rules. That is what the New Companies Bill is all about. So keeping that in mind, the Government of India is now in the process of making the rules. We thought it is the best time for us to have an interaction with the man on the mission, that is Additional Secretary M.J. Joseph. So on this Sunday morning, we have utilized the opportunity so that we can have whatever as a professional and as the New Companies Bill, whatever is coming up with and what apprehensions and reservations we have as a fraternity to throw up. Based on this, we have convened this program. I welcome you once again all. Now I request C.A. Nityananda to please give the welcome address. I request our past chairman, C.A. Venkatesh Babu, to please come forward and present a floral bouquet to our Vice President, C.A.K. Raghu. I request P.R. Suresh, our Vice Chairman of the region, to please come forward and present a floral bouquet to Santana Krishnan. I request Mr. Ramanujam to please come forward and present a floral bouquet to Suresh Senapati. I request C.A.P.V. Srinivasan to please come forward and present a floral bouquet to Nityananda. He is a co-opted member of the Corporate Class Committee, and he has been a dynamic Central Council member from our Bangalore branch. Thank you, sir, and it's now over to C.A. Nityananda.
Good morning, my professional friends. Mr. Ravindranath, our chairman, said I will give the welcome address. Whether I am giving a welcome address to the Companies Act 2013 or to the rules framed which are notified, just thrown open for public comments, or the two more installments of the rules which are being thrown open for public comments in the next maybe 2 or 3 weeks, I am not very sure about what I am welcoming. Of course, we have no choice. We should welcome Companies Act 2013. It's already passed in the Parliament. President's assent is also there. But what is important, I think our dynamic Vice President and equally dynamic Chairman of the Corporate Laws and Corporate Governance Committee, they will detail in their addresses. But the most important thing is rules are now thrown open, not only for comments from all of us, the professionals, but it is thrown open for the business community and the public to give their comments. What I have seen, whether it's an exposure draft on accounting standards or auditing standards, or whether it's a law which is going to be shortly enacted, we, take it easy at that stage. And once, it comes on the rule book, then immediately we say, this is the difficulty, this should have been drafted in a different manner. So, my earnest request here, because whatever little comments I had to give in this welcome note, is that please, take a sit on your computers or laptops or handhelds, and please shoot out your comments on all the critical rules which you feel, the draft rules which are before us. Because the number, I think Santan Krishnan was mentioning in the committee, we have received 37 comments till date. That is not the number we expect from such a large population of nearly 2 lakh CAs and several lakhs of students whom we have, and similarly several lakhs of clients whom we service, big and small. So it is our responsibility that whichever rules we feel are not practical, whichever rules need some changes, we should not just discuss or think about it within ourselves. We should discuss, maybe you can form a group of 10 people, 20 people, friends, and whatever, we have Facebook, we have Google, we have WhatsApp, so many things for other things. Why can't we also use all those things for giving our comments to the ministry, the institute, is the first point which I thought I should place before you. Once this Companies Act is there and a lot of things are in the rules now, and the rules can keep on changing. In such a situation, what happens, like what we have seen, whether it's indirect tax law, more so in the indirect tax law, what we think is fine, by the time we get up in the next morning, it may have changed by a rule, because making rules will be much more easier. So, concern one is what sort of checks and balances will be there as far as the rule making is number one. Second, many things are delegated to the officials. Many things are delegated to the tribunal, which were earlier maybe in the high court level. So, when things are delegated to the officials, what sort of, again, checks and balances are there? And again, when you are levying heavy penalties on the chartered accountants, heavy penalties on the directors, on the companies. So, what is the time limit within which we can expect service, and what is the responsibility fixed on the officials who are given these onerous responsibilities and powers is another thing, and how exactly checks and balances for using those powers which are vested in them is another concern which we have to really bother about. Then, of course, on the accounts and audit, then corporate social responsibility, many more things. And if you look at the rules, corporate social responsibility, they want some sort of end-use certificate from the board. Again, whether, chartered accountants, Mr. Chairman, Santan Krishnan and Vice President, when they have notified these rules, they are given the form in which the board has to report on the corporate social responsibility. Can again chartered accountants be of professional help to the corporates to give that end-use certificate, because it's very large. I mean, Senapati is sitting here, 2%. He will give a mind-boggling figures. I don't know how many zeros I had to put after the figure, what he mentions. So, when such large amounts, they are doing it without the CSR. Wipro is doing without CSR such large social projects. So, when there is a specific reporting requirement, whether chartered accountants can be there is question one. Then on the accounts and audit, there are several issues which we have discussed. And again on the internal audit, you see, many cases what has happened is we are bracketed along with the CMAs, the cost accountants, cost and management accountants, the secretaries and other professionals. So in case of internal audits, the companies will be required to appoint internal audits for every listed company, every public company. This is the rule I am talking. I will not discuss anything on the Act, because Act is already there. Okay. So, and every other public company which has any outstanding loans exceeding 25 crores. So my point is, why only public companies? When 25 crores you are talking of, you are looking at basically from the banking or the financial institutions, the monies have flowed into a corporate. So why can't, even a private company, because there are large private companies, private companies with huge borrowing, huge, operations, which can really, outmatch many of these public companies. There are so many private companies with even the minimum of the minimum capital. But when you look at their turnovers, when you look at their operations, it's very, very large. So why restrict this internal audit requirement? I'm not talking from the angle of the opportunity for chartered accountants. I'm only on the principles that if by chance you think 25 crores, if it goes to the public companies from the banks and financial institutions, it requires an internal audit. Why not, even a non-public company? That's one issue. Because the time is short, I will not be taking you through various other things, because other people also. Then other major issue is on the voluntary revision of accounts. See, one is the revision of accounts itself is something which none of the accountants like, and corporate governance, doesn't really require any type of revision of accounts if everyone is responsible. All the players, whether it is the corporates, the directors or the auditors, everyone involved is responsible. There is no question of revision. Here there is a provision for voluntary revision. The board itself, can go into a revision. Board can sit together, decides that these accounts are not properly prepared as per 131 and other relevant sections. So why can't we go for a revision? And take, for example, cases where there's a change of management, there's a takeover of management. We value some company, especially, the IT and other knowledge-based industries. And once we get into the company, we understand that we have paid more. We should not have paid so much. The valuations were very wrong. And then, can the board decide there should be a revision? And in this whole scenario, having sat in the council and disciplinary matters for 9 long years, most situations, if 2 warring groups are there in management, 2 warring groups are there in a housing society, 2 warring groups in a company, the scapegoat is the chartered accountant, who is either inside or as a statutory auditor. So, there again, lot of safety net in the rule making has been tried out, and the opportunities for the chartered accountants have been given. And even the board of directors, earlier board of directors, the auditors should be given a sort of opportunity. That again, I think will be detailed in the subsequent sessions. And of course, the rotation of auditors. We have always been rotated in terms of responsibility, but now officially we are rotated. And also there is a retrospective tinge given to the rotation. Because we always thought Companies Act 2013 will come and next 5 years I can be an auditor if I'm an individual and if I'm a firm 10 years. But now they say, if you have already completed 5 years, please prepare yourself in the next 3 years and vacate your chair. But it's a very welcome thing as far as the Chartered Accountants fraternity and our young friends are concerned, so that more and more opportunities are there, so that maybe one day I can visit Ms. Senapati as auditor. Okay, otherwise it would not have been possible. Not only me, any one of us, I'm talking. So it's a very good thing, and I'm personally exceedingly happy because this matter came up way back in 2005 on the council table at Kolkata, and out of 30, I was the lone sort of voice for the rotation, at least after 18 long years. I'm happy it's coming as a legislation. These are the few points as a curtain raiser I would like to raise in my welcome address, and over to my other fellow speakers who will give you more insights into the Companies Act and the rules and the road ahead. Thank you very much for the patience.
That was a brief welcome of the Companies Act by Nityananda in his own style. Now I request our Vice President to give the special address on this Companies Act 2013.
Good morning, friends. Chairman of the Bangalore branch of the Institute of Chartered Accountants of India, my good friend Mr. Ravindranath, my esteemed council colleague Mr. Santana Krishnan, Chairman of the Corporate Laws Committee. He has been continuously associated as the Chairman of the Corporate Laws Committee for the last 3 years. He has been a member of the Rule Making Committee, contributed a lot to the cause of the profession, not only as the Chairman of the Corporate Laws Committee, but in various other initiatives of the Institute. I am very happy that he is here in Bangalore. A warm welcome to you, Mr. Santana Krishnan. Mr. Nityananda, former Central Council member and currently a co-opted member of the Corporate Laws Committee. Mr. Suresh Senapati, the most popular CFO in the country today. But when it comes to institute activities, I just have to pick up the phone and tell Mr. Suresh, you have to be here on Sunday, and he says yes. That's the kind of love and affection Suresh has for the profession. Thank you, Suresh, for having joined us this morning for a session on the Companies Act. And all the distinguished members present here, all the senior members, it's nice to be amongst you again here in Bangalore, because most of the time I am outside the city. Maybe in a month, Suresh Senapati is asking me, Raghu, how many days you're in Bangalore? I just told him, sir, I am just there for 4 to 5 days, just to come and pack my bag and leave again. The kind of schedules we have as the Vice President going around the country is huge. But yes, it's been a great experience, a challenging experience, and I would like to thank each one of you here, because if I'm here as the Vice President of the Institute, all of you, every one of you here have played a very important role in supporting me and electing me to the Council. Having said this, coming to the session today, we thought it's an opportunity for us to have the Secretary, Ministry of Corporate Affairs, Mr. Joseph, who will be joining us a little later, for an interactive session with the members of the Institute. Then Mr. Santana Krishnan requested me, Raghu, why don't we do a program here? I said, fine, sir, it'll be nice. And at a very short notice, we have organized this program, and thanks to all of you for having joined us on a Sunday morning, in spite of a hectic tax audit schedule. Friends, what I would like to do is the next 15-20 minutes, very quickly take you through a small presentation as to what we at the Institute are doing on the Companies Act. Because the Companies Act 2013, as Mr. Nityananda very rightly said, has thrown a lot of challenges for the profession, for the Institute. And yes, as an apex accounting regulator, we have a very important role to play to ensure that the interests of the professionals, interests of the Institute are taken care. Right from the time the Companies Bill was passed by the Rajya Sabha, we have been meeting the various officials of the Ministry of Corporate Affairs, We have met the minister many times. We have expressed our concerns to him. But only thing which I would like to say is that the minister, Honorable Minister for Corporate Affairs, Sachin Pilot, has been extremely proactive. He has always assured us, he has said that Institute is a part of the Ministry of Corporate Affairs. We are very keen to see that your interests are taken care, and whatever suggestions your members have, your institute has, you please give it to us, we will be able to consider it. This is a feel-good factor what the minister has said. Having set the background, friends, as you are aware, it was passed in the Lok Sabha on 18th of December, Rajya Sabha on 8th of August 2013. Long time for the bill to be passed, and today the Companies Act has 29 chapters, 470 sections with 7 schedules, against 658 sections and 14 schedules of the Companies Act. Substantively, it's a law based on rules, because in various places in the Companies Act, maybe as many as 336 places, it says, as may be prescribed. So there's a lot of importance being given to the rules that has been put up, the draft rules has been put up for comments, public comments. And we at the Institute have set up 20 study groups across the country to study the rules and the various provisions of the Companies Act, so that we could give a comprehensive memorandum to the Ministry of Corporate Affairs. Yes, a new law was needed very badly for India, considering the way India is growing fast. We are on the fast track of economic growth. Changing stakeholders' expectations, the regulators. Yes, there are a lot of changes that is expected from them. It could be investors. And the number of companies that have increased in India. 1956, we had about 30,000 companies, but in 2013, 11 lakh companies are there. And there's a need for a framework that is robust, that is good, that can be benchmarked with other countries around the world. I think this is a step in the right direction. The Ministry of Corporate Affairs has taken a lead to bring out these new legislations. Some of the new concepts that have been brought out in the Companies Act is 33 new definitions have been introduced in Section 2. Private company to have a maximum of 200 members. Earlier it was 50. One-person company has been introduced as a concept. And they've also brought in e-governance, which I think is a very good step, permitting companies to digitally maintain their records. Inspection also of documents by the companies also in electronic form. Section 177 talks about whistleblowing, a vigil mechanism that has been introduced. And the fact that yes, one woman director to be under Section 149(1) is prescribed. There is also a restriction on the layers of subsidiaries, Section 287. Financial year of the company to be aligned from April to March. A 2-year time frame has been given to all the existing companies to align to this particular new timeline. Memorandum not to have any other objects. And yes, a person cannot be a director for more than 20 companies instead of 15 as provided in the Companies Act. And out of this 20, he cannot be a director of more than 10 public companies. Another new concept is shareholders who have an exit option if the money raised has not been utilized by the company. Of course, CSR is one big new initiative that has been introduced in India, and we need to see how exactly CSR would be implemented, how the companies would see that the CSR initiative reaches out to the society. The concept of independent directors, the definition has been introduced in Section 149(5). Then in addition to this, a company can also make buyback, even if at any time in the past there has been default in repayment of deposit or interest, redemption of debentures or preference shares, payment of dividend. But of course, the default must have been remedied, and a period of 3 years must have been lapsed after such default ceased to subside. I think that's a good step. Condition and manner for issue of bonus shares has also been introduced, a new concept. New provisions suggested for allowing reopening of accounts in certain cases with due safeguards, consolidation of accounts, secretarial audit report by a company secretary in practice is required to be attached with the board reports. Coming to the regulation, we have three new things coming in. The National Financial Reporting Authority, known as NFRA. Shortly, it's NAFRA. That's how we call it in the council. National Company Law Tribunal and Serious Fraud Investigation Authority. These are the big three things that would affect all of us very directly. When we talk about SFIO, the investigation into the affairs of a company by the Serious Fraud Investigation Office can happen in four situations. When they receive a report of the registrar or inspection under section 208, on intimation of a special resolution passed by a company that its affairs have to be investigated in public interest, or request from any department of the central or state government. This is the four situations where investigation can be ordered into the affairs of a company by SFIO. Wide powers have been given to SFIO in the Companies Act, and SFIO's report is to be treated as a report filed by a police officer, and SFIO will have powers to arrest in certain cases which attract punishment for fraud, and person accused of such offence shall be released on bail. So huge penalties have been prescribed for fraud-related offences in this particular SFIO. Then we have the NCLT, the National Company Law Tribunal, established by the central government through notification, consisting of the President and judicial and technical members. And any person aggrieved by an order of the tribunal may prefer an appeal to the appellate tribunal, and no appeal shall lie to the appellate tribunal from an order made by the tribunal with the consent of the parties. NFRA, something that concerns the institute, concerns all of us, wherein in addition to the accounting standards that are currently being formulated by the institute, as you are aware, the accounting standards of the institute is formulated by the Accounting Standard Board. It goes to NACAS. The NACAS reviews and approves it, and finally it is notified by the central government. So this process would continue, but instead of NACAS, you will have NFRA coming in. So the entire activities of NACAS would be handled by NAFRA. But in addition to this, the auditing standards of the institute that is formulated by the Auditing and Assurance Standard Board again will now move to NFRA. Formulation would lie with the institute. NFRA would review it, and it will be notified by the central government. So NFRA is something which we have given our views to the ministry, and we are also submitting our views since the draft rules have been notified very recently. The central government may prescribe the standards of accounting or any addendum thereto as recommended by ICA in consultation with and after examination of recommendation made by NAFRA. As I told you, it's very similar to the current scenario. The powers of NAFRA are, some of them are similar to what is being done by ICA currently. Monitor and enforce the compliance with accounting and auditing standards. They will ensure whether the members are complying with the auditing and assurance standards. They would also oversee the quality of professional work. Quality of professional work has been a concern whenever we interact with the regulators, let it be Reserve Bank of India, coming to the quality of bank audits, CBDT, quality of tax audits, been a concern with the regulators. So the NAFRA would oversee the quality of service of profession associated with ensuring compliance with such standards, and they have the power to investigate into the matters of professional other misconducts committed by any member or a firm of chartered accountants, and the penalties would range between 1 lakh in case of individuals and 10 lakhs in case of firms. And they also have power to debar the members of firms for a period of 6 months to 10 years. This is what NAFRA says. And the appellate authority constituted under respective acts shall be deemed to be the appellate authority against an order made by NAFRA. This is another change that has been brought about. What are the challenges before the profession because of Serious Fraud Investigation Office, NCLT and NAFRA? These are the 4 things which I have identified. Challenge A is the audit and auditors. Challenge B would be voluntary revision of financial statement. Mr. Nityanand has already touched upon it. Class action suits and definition of fraud, which will have a major impact on the profession. And 4th one is NAFRA. As far as the voluntary revision of financial statement by the board, section 131 of the new Companies Act talks about voluntary revision, and the fact that the original auditor should not be asked to give either consent or dissent. We have said that the ICAI should be consulted before taking a decision on the voluntary revision of financial statements, because it's a very serious matter, and the very thoughtful consideration should be made by the Ministry of Corporate Affairs, because there are a lot of ramifications in case of foreign investors who invested money based on the accounts that were already adopted in the AGM. And what we are trying to say that, yes, to begin with, maybe voluntary revision of accounts to be restricted to a certain category of companies with high share capital and reserves. But yes, we are trying to collect the opinions of the members across the country, and we would, the institute would make its recommendation to the ministry once we get all the suggestions from the members. Talking about concerns on CSR, two things. As Nityananda said, it's an opportunity for all of us. CSR audit could be an important area where all of us could offer our services. We at the council have taken a decision that 100 audits would be done by the members of our firm, free of cost. Way forward, as and when the ministry requires our services, we would like to offer our services to the CSR activities of the various corporates. This is just to demonstrate our commitment that yes, we as a profession are also keen to support the CSR initiative. Then coming to audit and auditor, section 139 to 148, number of changes has been brought about. Every company shall at the first AGM appoint an individual or a firm as an auditor who shall hold office from the conclusion of that meeting till the conclusion of 6th annual general meeting. Compulsory rotation of individual auditors every 5 years and audit firm every 10 years in case of listed companies. And in case of other companies, they have said that it will be prescribed. So that is something which we are trying to find out and tell them to keep certain companies out of audit rotation. There will be a transition of 3 years for us to move into the audit rotation regime. Globally, audit rotation has been a big failure. I was in New York last week and there was a presentation by various jurisdictions about audit rotation. All the countries, USA made its presentation, the European Union, Australia. Audit rotation has not taken off. I think our country would be one of the first jurisdictions around the world where audit rotation would happen. We need to see how audit rotation would be a success in India. But yes, they've given a 3 years transition for companies to look at audit rotation. And then the members of a company can resolve for rotation of an audit partner and also for audit to be conducted by more than one auditor. And when a company constitutes an audit committee, all appointments, including filling the casual vacancy of an auditor, shall be made after taking into account the recommendation of the audit committee. This is another change that has been brought about in section 139. Appointment is done once in 5 years. Ratification is to be done every year. So there is a confusion between the words ratification and reappointment. More or less, the terms need to be, looks like it's the same, but yes, there's some clarification required from the ministry. Mandatory retirement after 5 years in case of individual and 10 years in case of firms. No auditor or audit firm having common partner shall take audit for a consecutive term of 5 years. After 5 years have been completed, this is another important change that has been brought in. Auditor, audit firm and audit firms having common partners shall not take up any audits for a consecutive term of 5 years after 5 years have been completed. That's very, very important for you to keep in mind. And it's applicable to all listed companies. And again, companies of such class as may be prescribed, it's still an open door for the ministry to decide which are the other class of companies that will come in. And a person at the time of appointment or reappointment holding appointment as auditor of more than 20 companies shall not be eligible for appointment. And in case of LLP appointed as auditor, only chartered accountant is allowed to act and sign on behalf of the firm. I think members are aware the institute is now permitting you to set up LLPs, and it is possible for you to convert your existing chartered accountancy firm into LLP firm. You could also create a new LLP firm. And now with the passage of the Companies Act, it becomes all the more easy for you to get appointments directly in the name of your LLP. And we have been witnessing a lot of firms converting to LLPs, and we see a lot of activity happening in this particular new vehicle that has been brought about. Multidisciplinary partnership is also allowed as per the new Companies Act, but yes, there are concerns. We had a coordination meeting recently between the Ministry of Institute of Chartered Accountants of India, Company Secretary and the Cost and Works Accountants. Until we evolve a model that is suitable for all the three institutes, multidisciplinary firms would still not take off. That is my apprehension, because right now there are certain concerns. We had a very detailed debate for more than 2 hours at the office of the Institute of Company Secretaries. As of today, multidisciplinary firms are permitted in the Companies Act, but until we bring about the sort of changes around all the three institutes' regulations, this might be difficult. When we talk about the concerns on the rules, audit rotation should be applied only for public listed entities, maybe based on net worth or share capital. And we are also saying that rotation should be restricted. Maybe sole proprietary firms should be out of rotation, because India as a country has maximum number of sole proprietary firms. If you take the profile of the firms in India, 98% of the firms are sole proprietors or partnership firms having 2 or 3 partners. So we are very keen to protect the interests of the small and medium practitioners. So we are trying to tell the ministry that there should be a distinction between small firms and the big size firms. But yes, we have still to give our final recommendations to them. And we are also telling that the cap of 20 companies should exclude one-person companies and also private companies. And when we talk about the definition of relative, we should include only relative which is financially dependent. So these are some of the things which you have said. Fraud is something I would not like to go into great detail, but yes, huge ramification. Mr. Krishnaswamy was just discussing this morning about the fraud, because here, when there's a fraud, a duty has been cast on the auditor to report to the central government on an offence involving fraud which is being or has been committed against the company by officers or employees of the company. So this is something, a huge responsibility of the auditor. Only thing we are trying to tell the ministry is that we want them to follow what we have talked about fraud reporting in line with the auditing standards issued by the institute. Because right now, under the Companies Act, an auditor has to report on a fraud committed on the company by the management and external people also committing a fraud on the management. A lot of clarity is required on this particular role of the auditor here. So I think there needs to be a debate, there needs to be a proper framework set in as to what kind of reporting an auditor has to do on fraud. Expectations are very high, but we feel as an institute it's very difficult for auditors to report on each and every fraud that is taking place. But yes, this is a concern area. The new Companies Act also says these services are not to be provided: accounting and bookkeeping, internal audit, design and implementation of financial system, actuarial services, investment advisory services, investment banking services, any other kind of service as may be prescribed. Again, that have kept it open. This we are not very comfortable. What we are trying to say is that management services should exclude 25 items which are permitted by ICAI. ICAI permits you to do certain kind of activities, doesn't permit you to do certain kind of activities. We are telling the ministry, please follow this. And we will come out with a prohibited list of activities which our members cannot do. We have told them that we will come out with a negative list of services which our members cannot do, so that members could follow this. So we also need to have clarity on the application on services rendered outside India, differentiate public interest entities and others. And wherever possible, we would like to say that all the services prohibited to be specifically defined, so that members don't end up with issues with the disciplinary committee. And in case the auditor contravenes the provisions related to his powers and duties providing service under 144, then in addition to punishment provided in the section, he shall be required to refund the remuneration received by him. Yes, the next one talks about partner or partner of the audit firm. The firm shall be jointly and severally responsible for the liability, whether civil or criminal, as provided in the Act. This again is a huge ramification, because it talks about joint and several responsibility of the firm and all the partners. Yes, this is a matter of concern. And if it is proved that the partner or partner of the audit firm have acted in a fraudulent manner or abetted or colluded any fraud in relation to or by the company or director of the company, they shall also be punished in the manner in section 447. I think this is something very, very huge responsibility in the profession. Then, as I told you, the definition of fraud is too exhaustive to cover the auditor. So there's some clarity that is required. We're just working out as to how best we can arrive at this clarity. Penalties and fines are too heavy and not commensurate. Yes, this would call for auditors to go for insurance. Mr. Krishnaswamy was telling the audit services, the cost of the audit services would go up, because everyone have to step up their audit, kind of documentation required. You need to step up your audit quality. Cost of audit services go up, and all of us need to go for insurance. And what we have also said, that we have also asked that an opportunity to be provided to the auditor before imposing any penalty. If they want to impose any penalty on the auditor, an opportunity should be given, is what we are trying to say as the rules is concerned. And as far as the small company and OPC and dormant companies, we have said that the formats are too large. We are looking for a simple and small format. And we also said that a check on OPC funding and formation is required to ensure that KYC and prevention of money laundering and illegal activity doesn't take place. Opportunities: internal audit, CSR audit, official liquidator, registered valuer. Internal audit, such class or class of company shall be required to appoint an internal auditor. Yes, cost accountants are also there, but now internal audit is mandated by law under 138. Registered valuer is another opportunity for our professionals. Official liquidator section 275, wherein there is another opportunity for us, and CSR audit would be another final opportunity. Friends, these are some of the concerns which I thought I should discuss with all of you, try to sort of bring to your knowledge. Yes, the intention of this program today is to get a feedback from you, because we are in the process of receiving feedback from across the country. We're getting a lot of mails, we're getting a lot of calls from our members expressing concerns, asking us as an institute to take up these issues. We thought this interactive program would help us to understand your concerns. We'll map all these concerns. The chairman of the Corporate Laws Committee, Mr. Santana Krishnan, would try to see how best we as a profession, as an institute, represent before the ministry and try to see how best our profession is protected, our professionals are also protected. With these few words, I'm very, very, very happy to see all of you today, and I'm sure we'll have a very fruitful discussion today, this afternoon. And feel free to write to me anytime. You can pick up the phone, send me an email. It's just not limited to this interaction. The next 20-25 days, you are very, I would request you to please send in all your suggestions to us so that we'll be able to map all the suggestions and try to make a proper presentation to the ministry. Thank you very much.
Friends, we have just now heard from our Vice President the new Companies Act that is coming to being with all the new rules under the framework. Now we'll have Mr. S. Santana Krishnan to address the members. He is the chairman of the Company Law Committee.
Good morning, friends. Vice President, I'm extremely happy to be here because this is the first meeting I'm sitting along with you in the dais after we became the Vice President. And it's very extremely nice, and that too in Bangalore and also on company law. And the company law, after the act has come, this is the first meeting that we are having. I'm very happy that you are here. I needed to share some confidential information with you before the Secretary comes. I can't talk in his presence. That's why I thought I'll step in now and let you know. The Companies Act and we are Companies Act, and we are also in a rulemaking committee. Our institute is the only representative body representing the profession that we have been there, and we have been very fortunate. And a few things which is very important is, I have seen up to yesterday, we have received 31,000 visits to the website. 2,371 people have responded. I have not found except 3 or 4 from Karnataka. Very, very important is we have to send our views to the ministry. One institute's representation will not be taken seriously. It has to go in large numbers from the profession. So I'm saying, whatever is your view, please express it. It's like voting in an election, which is very sacred duty of yours. This act, if you ignore and if you don't do it, it cannot be an institute affair. It has to be every individual will have to give your views. I'm suggesting to him, you will all support me, that he should give you 4 hours of CPE credit for giving a comment. Even if you give one comment, I'll be very happy if the Vice President, President can give us but this is very, very important. Please give it. The second issue is, some of the issues on which the rulemaking committee has recommended or they have conceded to us have been withdrawn while giving you the exposure, because government wants to keep this as a bargaining power. I'm sharing very, very confidential. This meeting has to be so organized and so respectful to the ministry, because we have some more rules to go. We don't want anybody to hurt us on the way. So better be very, very cautious. No, I have no problem. This they can go, because I have to tell them. Okay. Very, very important is, I should pretend as though I'm not aware of the webcast, but they should all know about it, because very critical for us is, I must also tell you that the ministry and the minister, particularly Mr. Joseph, who is coming here, there is Renuka Kumar, who is the Joint Secretary, have been extremely cooperative and very, very nice to the institute. But certain things that have happened in this act are at the backdrop of Satyam. They are still unable to remove the Satyam episode and Satyam scandal from them. Unfortunately, subsequently, you had Reeboks, Calcutta Chit Fund Company case. So many frauds have happened. In fact, the fraud definition came because we represented to the parliamentary committee. You have not even defined the fraud. Then they brought in fraud. Unfortunately, at the time of the definition, that they have not dealt with. I'll deal with 4 or 5 administrative issues, then I'll take some other points also. So very critical, you will have to give your views. Second is, we are entitled to 45 days to 60 days time for giving opinion. They have now tried to put it in 30 days, thinking nobody will ask them, they can speed up. In fact, if you had seen it, the speed with which they notified some of the sections day before yesterday, much against my own wish and our own wishes, that it has landed themselves into say various problem, because the moment you say one section is not available, the new section has come in, then corresponding problems are there. Therefore, my request is, particularly because all the auditors are likely to be busy up to September 30th, because of your tax filing and various reasons, please ensure that you exercise your fundamental right of adequate time to give you representations. You cannot be driven to your October 8th one, you have this, and then you have October 2nd would be a holiday. Just like that it will go. We normally don't respond to these things and then come back later and blame ourselves. This is not an occasion where you can do that. You have to do it now and now. Please don't forget this. The third issue is to Suresh. We believe that the corporates have far more lobbying power. I think profession and the corporates will have to go together. I am against institute only talking about auditors rotation and fraud, etc. We also need to look at the industry. Industry also needs to look at it. That is something which I would always like, just as we are taking Senapati wherever we go, I want Senapati also to take me wherever, take the President, Vice President, wherever he goes, because lobbying is something which we are not very good, and it is needed in this country if you have to do lobbying. The fourth issue is, if you are all worried that the profession has been badly affected, all this, don't get into this kind of sentiments at all. One issue is that NAFRA was originally for Costing Institute, Company Secretary Institute, CA Institute. We fought and said, no, they can't come along with us. There is no public interest involved in it. If you want to constitute a separate NAFRA, separate NAFRA. Why are you subjected to a very, very special discipline? Because you are special to the community at large. Because there have been second opinions on doctors and lawyers. Is he coming? Sorry. Has he left? He just left. Okay. I want to finish before he comes. Now, there is no second opinion to your lawyers, to an auditor certificate. That is why you are being subjected to a lot of controls. So don't get worried about the controls. Make NAFRA jobless by doing your quality work. That is what is expected of you. Why are we scared of NAFRA? Let NAFRA be there. But I have told the minister, I have told the secretary that we will ensure that NAFRA has no job. And if you think NAFRA is going to do wonders, they will realize anything that has gone into the government hands has never come out properly, and it will be corruption, it will be so many things. So I don't think we should get unduly perturbed about it. Fourth important issue on this is, auditing standards is also taken away. No, auditing standards have not been taken away. Let me only tell you, now the auditing standards have got a legal endorsement. Now tell me in NACAS in the last so many years what we have prepared standards and what we have changed. Where has NACAS changed anything? Except probably one line of an accounting standard. That means NACAS is not keeping quiet, but NACAS is extremely happy with what we have done. Let me also tell you, the last 1 or 2 years, with the help of the President and Vice President, we have covered almost all the auditing standards. We have made the NAFRA's Accounting Standards Committee and the Auditing Standards Committee jobless. Because we have completed almost all the standards. And we have got the legal sanctity that the standards will be set only by the Institute of Chartered Accountants. They have only got power to endorse it. They wanted cost accounting standards, secretarial standards to come in. We said no public interest involved. You cannot bring them in. They have been kept out. If you think that somebody comes and tells you that you are singled out as a profession, no. Your special status is being recognized and certain restrictions are coming in. I think that is going to be with our internal work. We also need to distinguish between what you lose and what you gain. In rotation, we are not losing anything as a profession. I am not here to say, I for one believe that if the public sector banks and public sector institutions have been subjected to rotation and there has been no problem in quality or in cost, I don't think we can oppose the rotation. Second, today you can't oppose rotation because already in the statute book, you can't say what the Lok Sabha has passed, we will not agree, and you can keep on jumping, but then nobody will listen to you. But very important in the rule making committee, what we have said is that rotation will not apply to private companies, and it will apply only to companies having net worth of 500 crores and above. Somehow, the last minute, the ministry had changed it. Probably they thought you will all keep quiet and you don't agree with this view. Please, if you agree with this view, please say it should not apply to private companies. What we said was, even if it has to apply, don't bring everything on one stage. You have given a 3-year transition period. You take it on the second year or third year. And This concept of rotation can only apply to companies in which public are substantially interested or public interest is involved. What we define public interest is 200 crores of borrowing or 100 crores of capital or 100 crores of net worth. One can differ on the view whether it is 100 crores or 500 crores. I would request, if you agree, please give the suggestion saying that rotation should not be made applicable to all these companies. Then the other one is on fraud definition. We have very clearly said, please say this if you agree with me, fraud on the management, fraud by the management will have to be distinguished. You cannot treat all corporates as thieves. This is where I need Suresh's help also. You cannot treat the entire corporates as thieves. In fact, CSR, the institute had taken it up strongly, much more stronger than even the industry. Government is outsourcing its social responsibility to corporates. Is it correct? I think government should do its social responsibility. Corporates have already been doing quite a lot. Take for example Wipro, take for example Infosys, take from Tata's. They are all spending much more than 2%. So they are trying to put all this fraud definition. We have to distinguish between fraud by the management on the management. If it is on the management, they will have to report to the audit committee. If it is fraud by the management, then we will have to bring in. With great difficulty we have brought in materiality, but please say that it is impossible because supposing we file all complaints, all kinds of frauds to the ROCs, where is the time for them to look at it? And what will they do with that? You take, I'll give you an example, you take Indian Oil. The pipes run across the country and every state there will be a pipe broken and 100 kiloliters of crude oil or petrol will be stolen. Are you going to be reporting every day 20 frauds going from companies, 20 frauds going from each company? It's impossible a performance. So I would request you also to consider that. And probably one more detailed session that I will have it, and I think it's just come. I'll probably also simultaneously welcome him and then close. So we will have to keep our discussions a little later. I will come one other day before this. Our views have to be given. So I would suggest that we will all have a very, very interactive session at that time. I would like to have a very detailed and note from all of you, and I will explain to you the backdrop of on what basis we have considered these rules, and these rules are changeable. You don't worry whether those rules have already come. They can be. Give all your views. The number of views that I get on a topic will enable me to have a better bargaining power and say that this has to be changed very quickly. I'll wait for 2 minutes. 2 minutes. Good afternoon, sir. Good afternoon. I'll conclude it with my. I'll conclude. Now, sir, I did not want to embarrass you, sir. So before you came, I shared whatever I had to share with them. So I'll be very frank with you because after all, you will see me webcast anyway, sir. But I think I'm extremely happy because this is something. Yeah, I said. No, I have not said that, sir. I'm going to say the correct things. I think I mentioned to you that it gives me great pleasure and immense professionalism when I work with the ministry, particularly my secretary, the joint secretary, the additional secretary who is here, Mr. Joseph. It has been truly professional discussion. I can say if I have to give a balance, and they were the balances there. They were never going this side or that side. Some of the issues that could have come today in the rules, which you and I may not like it, could be despite them, not because of them. So that's something which you should all know, because in the ministry, in the government, there are several governmental issues involved. Government may have certain views, so they may want to put it. Sir, I must also thank him, Mr. Joseph, that I heard that he was coming to Bangalore. I said, you must come and address the institute first. You can't go anywhere else. He readily agreed and made an hour slot for us to be here. Sir, I must sincerely thank you for having agreed, despite the fact it was the last moment. I really requested him because it was Bangalore and Vice President was there. He did not even say no. He said yes immediately. And we also wish you a great Onam for you, sir. You have come a great time. If you consider somebody as a friend and bureaucracy as a friend of ours, Mr. Joseph is truly one of them. I'm giving an auditor certificate for his conduct in being there with this. I'm sure, sir, the profession has certain concerns which will have to be addressed. We also believe at a time when the business climate is so negative, no negative message should go through any law, because we don't want Sensex to fall down, because the industries will have to report on so many things, etc. But I'm sure before the rules come, you will take care of most of the concerns to the extent possible, which is not in the Act, and take care of our interest. The only thing that we want to, there is a popular request. You have given us only 1 hour time. Probably next time in the month of October, we would call you for a longer session to interact with all our suggestions. We have very, very senior members like Ms. Kriswamy, Ms. Naglia and others. So they may want to speak after you speak for 1 or 2 minutes. Now, thank you very much. Once again, can we welcome Mr. Joseph with a standing ovation, please? Thank you. Thank you. Thank you.
Friends, after this standing ovation, it is our customary to invite our guest with a floral bouquet. I request Vice President of Institute of Chartered Accountants of India, Mr. K. Raghu, to please welcome our guest with a floral bouquet, and I request Santana Krishnan to adorn him with a shawl. Thank you very much, sir, for having accepted our invite to come and address our members. Before we start this program, we would like to inaugurate this program with lighting of the lamp. I request all the dignitaries on the stage to please inaugurate this program by lighting the lamp.
सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शितः सर्वे तदूनात्यधिकश्चन एतद्द्वैत 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 एतद्द्वैत
Friends, as you all know that rule making is in the process and we have a lot of queries to ask to the Ministry of Corporate Affairs. I request all the members to please write down your queries and we can hand it over as a bunch of it to our Chairman of the Corporate Laws Committee on the Central Council, Mr. S. Santana Krishnan. Then we can take it forward from the Institute. Now I request Suresh Senapati to please address the members from the industry perspective.
Dear Mr. Joseph, thank you for being here on this occasion, auspicious occasion of Onam. The subject being so close to his heart, the amount of efforts that he has put in to bring about an act of 1956, more than 60 years now, into giving a new life for something which is much more simplified, much more precise, much more better to read, providing a lot of empowerment across the hierarchies in the corporate world, and also giving a lot of teeth to a lot of enforcement authorities, which means huge amount of deterrence for things to fall in place, which we have experienced in the past several years. My good friend Raghu, our Vice President, he talked to you in terms of the number of days he spends on the flights, being again very close to the profession, very passionate about wanting to do some things, make a difference. Welcome Raghu here. SK, again a good friend of mine, very passionate, spends enormous amount of time. I don't know how he sort of spends any time for his own clients and customers. I'm sure he has excellent partners in his firm to be able to deal with that, but his contribution has been fabulous and excellent. Mr. Nityananda and Ravindranath. Ladies and gentlemen, thank you for giving me this opportunity to be able to come here and share some of those issues that we have in the corporate world to respond to this new statute that has just about come in place over the period of time. First of all, really, we should commend the Minister of Corporate Affairs, Mr. Sachin Pilot, a youngster, a passionate man, wanting to make a difference, and his team, led by Mr. Joseph, where they have been working on it with the profession, with various stakeholders and the industry, to be able to come out with something which is going to address the problems from a various stakeholders' perspective. Mind you, you can never have a statute which is ideal for everyone and everybody. There is people in the corporate world, people in the profession, people in the government, people who don't want to practice good things, and therefore you cannot have a statute which suits everybody's requirement, but you will have a statute which will be balanced to be able to take care of every aspect that the stakeholders looks for. So many good things has been talked about, the new provision that has been brought about, and I would specifically talk about few things which we think definitely bothers the corporate world, and therefore a specific attention of Mr. Joseph to be able to deal with this issue, because we know that there cannot never be an ideal situation, but there has to be various perspectives that one should have and therefore strike a balance. The good thing about this particular new legislation is this is a legislation which enables various corporates in India to be able to operate in a global world where you can have operations across the globe, where you can have lot of non-Indians on your board, lot of non-Indians as employees and various stakeholders. So in that context, it does encourage deployment or adoption of technology in running of the business in a very effective and efficient way, and which is a good factor. An example in point is permitting video conferencing for board meetings. So far, even if you have directors in the US, Japan, wherever, everybody was required in person to be coming into a board meeting to attend, otherwise it wasn't a valid constituted board. And therefore, any decision that you could take did not have the sanctity of law. And this new legislation does bring to shape and does permit adoption of such technology in the current world. Having said that, while there is a good theory or a good purpose behind this, in some form the conditions or the caveat that has been prescribed there is little onerous, which is almost making this particular provision redundant or not even lived its life or cannot live its life, because it says the precondition is you have to record in an audiovisual manner the entire proceedings of the board meeting. Now when it says so, for example, we are in a board meeting in this particular room, there is no way how you can record where everybody is participating, one is talking and the other one is listening, etc., for the entire one day proceedings in any particular manner to be able to comply with law. And therefore, an audio recordings perhaps is easy because it will do record everybody who speaks. Whereas a visual, even if you take a camera on the top, you will get everybody's head, but you don't know who is speaking. Right? And from that point of view, you have to acknowledge where technology is there. Maybe the government has taken the technology far forward than what it has actually been achieved. But in this current context, it is important to provide that clarification that it is the audio recording which is important and not an audio visual recording. And B is that these particular recordings which are there, if it is to capture the dissents of the board members who are deliberating in these proceedings, these recordings should be valid till such time the next board meeting happens and it concludes with their minutes, which confirms the articulation of everything that got discussed and decided in the board minutes. After that, it does not require any more sort of life, but it should still be conclusion of the next board meeting where you conclusively confirm the board minutes, where every board member does confirm the proceedings of the previous board minutes. So that is one thought. If one can do some tweaking in the language, really the technology adoption can be much better. So second thing was with respect to the relatives. Now, there are a lot of new things that has come about in the relatives, definitely simplified than what it was in the previous occasion. But when you talk about people in the Hindu undivided family, the number of people that are there, and some of them you are in close proximity and many of them you are not in close proximity. And similarly, when you talk about some more definitions that are being contemplated in the rule, which is brother, brother's husband, sister, sister's husband, sister's son, and brother's son, and son-in-laws and daughter-in-laws, and so on and so forth. More and more in this modern world, with a lot of financial independence being seen, because olden days where it was to be the one mukhya of the family who earns and everybody sits down and depends on him or her for a living. That is not the case today with a higher level of literacy and more members of the family working. And therefore the ability to influence of any one individual is very, very limited and restricted, particularly when they don't live together and particularly when there is no financial dependence. Today you can say your spouse lives with you and she may be even financially dependent, and still we know how limited we have our influence on our spouses. But yet we can understand this is a particular hazard that we need to live with, like we live all the time. But I think some amount of clarification and definition need to be brought in vis-a-vis the financial dependence and also living together. And more you are also finding people living without even a marriage. So when you say spouse, they will not fall in the definition of the spouse. Or similarly, you can have a child without having been actually officially married. And we are not talking about only in Hindu. We are talking about all kinds of religion and all kinds of practices in India and globally. You can have a child, one child, two child, three child, out of one wife, multiple wives, same child, cousins with multiple fathers or multiple mothers and stuff like that. So those are the complexities that you talk about with. So therefore, and mind you, if this is an act that you are talking about in 2013 after 1956, which is after about 65, 67, 70 years, perhaps the next act will come in only in 2100, and therefore we should see the way the cultural family societies lifestyles change over the next 10 years and 20 years. It should be something which should be able to take care of that, and therefore co-live and financial dependence perhaps becomes the anchor for any kind of influence, and hence any obligations that can be cast on the law should have some of those elements built in. The third factor that I wanted to talk about is the restrictions in the Companies Act with respect to investment in other, in securities. Now, it says that if the interest rates are lower than the interest rates of a 5-year treasury or a 10-year treasury, then you cannot be investing in those kind of securities. Now, over the years, and again, compared to 1956 versus today, there has been a lot of changes. Tax-free bonds has come out as a new kind of investment, and particularly over the last 5 years have become very, very popular. Now, the very fact that they're tax-free, they do not have the coupon rates similar to a taxable security, and therefore, when you do an effective rate of interest or effective yield, people generally look at it from a net of tax basis. Now, that was recognized through representation under Section 372 in the old Act. However, some of that has not got translated in the new 2013 Act, and I would request and urge Mr. Joseph to make sure that that particular provision, which the government had taken cognizance of and therefore issued a notification, should equally be done under the new Act, which currently does not incorporate. The next point is with respect to the independent directors. Currently, the law says that you have to have independent directors the moment you are a corporate. Whether you are a corporate listed, whether you are a corporate unlisted, whether you are a corporate of 10 family members, 3 family members, 6 family members, you need to necessarily have independent directors. Or even if you have a corporate which is 100% subsidiary of A company and B company and C company, you need to have independent directors. I would say, if one just multiplies the number of corporate entities that are there into the number of independent directors that are required, the requirement may go into something like 50,000 to 100,000. Perhaps that is not what is intended when this kind of a prescription of law has come in place. But it should necessarily be in those cases where you are dealing with public money. Public money in the form of debt, say fixed deposit, public money in the form of convertible debentures, or public money in the form of equity holding of non-promoters for 5% or 10%. So if you have a completely private limited company with no shareholding other than the family members, should you be needing any kind of directors, independent directors to be employed, and should that be mandated at all, is something that we would like the government to consider and not make this particular thing very onerous to be able to have companies being run which are not in the private in nature and not so-called the publicly listed companies and or public companies where the shareholding ownership of the minority shareholders are much more than 10%. The issue came about, I think one of the good features this particular act has, and quite unprecedented across the globe, is corporate social responsibilities. While all of us as CFOs or all of us as finance professionals have been familiar with this triple bottom line accounting, which means when you are focused on your business, you are also should be focused on the environment and the planet and the society around you. Triple bottom line. How are you performing? What are the goals? What are your business goals? What are your environmental goals? And what are your goals with respect to the society? And how are you progressing? A lot of things happens qualitatively. A lot of things happens quantitatively. This is the first time nowhere in the world a similar such provision does exist, but the government of India thought it very relevant from an Indian perspective. Maybe they thought the Indian corporates are not doing enough, or they thought that the kind of need that our society has, it cannot be only the responsibility of the government, but also the corporate world to be spending some time and energy and attention to this society, in addition to what they do vis-a-vis the business goals that they have, dealing with their vendors, customers, employees, and many other stakeholders. One more statutorily prescribed stakeholders like social, CSR. Well, a good feature. I think there will be views against it, there will be views for it, and now that the law has been prescribed and approved by the Parliament, we should take it wholeheartedly. And it is important that we all realize that these are certain provisions which are of a voluntary in nature, which are in the nature, the way Minister has stated and the government has stated, are nature which is trying to, in some form, enhance literacy amongst the corporates guys. There is an obligation, in some form or the other, which you should acknowledge and recognize and make sure that you spend that time and energy. And make sure that you report your shareholders, because the shareholders that you have, the board that you have, need to be conversant with what you are doing in this respect, like you are required to do in any case of statutory obligations that you have, including governance of these companies. And therefore, as long as it got restricted to A, voluntary requirement, and B, presented to the shareholders, it's fine, and one should not further clutter it by saying, let me do an audit, let me, report in this particular manner, etc., etc. But yes, from a standardization perspective, because a person is on the board of A company, B company, C company, a shareholder, owns company A, company B, company C, and therefore there has to be some amount of standardization as to what is the CSR expenses that you talk about. How is the qualitative aspect of that is measured? How do you quantify that? How do you report that? So there is a commonality of understanding in this respect, and a good move in that respect is the institute, is the government of India has asked the institute to constitute a task force to come out with a recommendation as to how can you issue a guidance note which says this is how the CSR expenses has to be accounted for and reported in this particular format to the board and the shareholders of the company. Very good feature, and as long as adequate time is available post the articulation of the rules, because as you know, there are some of the rules which have already come into public knowledge for a debate, and there will be more rules to come in, and thereafter government will take its time to be able to come out with the final rules. After those rules come in, which means you have the act rules whereby the task force sits there and come out with, because all of us have to acknowledge that the elements of CSR that has been described in the schedule is very, very large and vast. And in that context, for the committee to be able to articulate and come out with some kind of a guidance note, including getting a debate from the public and articulation of that, will need adequate time. And from that perspective, there should be enough time made available to deal with the CSR rules that have to come. And therefore, it is important that time is given. And another point that I wanted to make here is that contributions to political parties or any kind of a contribution on the CSR with political themes, caste themes or religion themes should specifically be excluded. While the boards should be empowered to come out with ideas on which they should adopt a theme and spend money on, but any spends that is around programs which has these three elements, political, caste, religion, to my mind should explicitly be excluded in the rules that one talks about. Apart from the fact that CSR now being a statutory requirement in some form, though it is only with respect to disclosure, there has to be a tax deductibility which should be done by the CBDT or the Ministry of Finance, which will encourage more and more corporates to follow through. Sir, the other points are with respect to the multi-layer subsidiaries. Multi-layer subsidiaries, which creates a lot of concerns, because you are talking about A, B and C being three levels, and when you acquire another company, A1, A2, B1 and C1, you will have 6 levels of subsidiaries, which will have its own problem. And some of those transitionary provisions has to be taken care, and the government has to understand the complications that are associated with, and therefore adequate disclosure may be asked for, as opposed to making it restrictive not to be able to do this. The next thing is with respect to the audit issues, because when you talk about a company A, B, C and D, there are consolidations that happens at A level, because that's A, B, C, D go through assessment, they go through audited accounts on a standalone basis, but there are consolidation that is being currently prescribed at B level and C level. Now, while there is no assessment that happens, should there be any kind of an audit prescribed at a B level and C level, unless there is a minority shareholding or there is any kind of a public interest that are there? If it is 100% subsidiaries, a B is 100% subsidiary of A, and C is 100% subsidiary of B, and D is 100% subsidiary of C, should there ever be any kind of a requirement for audit in intermediary levels as opposed to standalone and the final consolidated entity? The other issues are with respect to the interstated shareholders, because now they are talking about if there is a conflict of interest or there is a related party transaction, the shareholders in the company, their voting will not be allowed. And therefore, if you talk about all the relatives being on the board of particular or on the shareholders in the shareholder meeting, and they have definitely a related party transaction, then you don't even have the quorum for a shareholders meeting. So that creates some kind of problem which definitely has not been contemplated, and I'm sure the government would take cognizance of this. The final thing I want to make is with respect to the cost audit provisions. While the rules have yet to come, it is important because we saw some of the developments over the last 2 years that cost audit is being prescribed left, right and center for every products and services which are even subject to global competition. computation is at the highest level. They are not necessarily something which are highly intensive. They are not necessarily items of mass consumption. They are not necessarily something where the government subsidies are there. So we would like that the government prescribes the rules and has adequate features, that it is much more restricted and purposeful, that the prescriptions of either products or services are there rather than across it all. So with these few things, which are, I thought, critical enough for getting the attention of Mr. Joseph, I will end here. Thank you very much for the Institute and all the dignitaries in the dais for giving me this opportunity to share the corporate perspective. Thank you.
Thank you very much, sir, for briefly touching upon the intricacies of this new Companies Act that is in the offing from the corporate perspectives. Now we'll have our Additional Secretary and the Chief Vigilance Officer, Ministry of Corporate Affairs, addressing the members. I request M.J. Joseph to please address the members.
Good afternoon to everybody, and a happy Onam as we greeted each other once again. Firstly, my deep apologies that I came late for this function, only because there was another function being held at the Hotel Capital by the Institute of Cost and Management Accountants, and I had to make an address over there as well. In fact, to be very honest, it's the third consecutive day that I've been speaking in Delhi, day before yesterday at the FICCI interaction, and then yesterday at the Bangalore Chamber of Commerce and Industry. Today is the third, and tomorrow I head to Bombay for a similar interaction with the CII, where our Minister for Corporate Affairs is inaugurating. So once again, thank you very much, Mr. Santana Krishnan, Mr. Ravindranath, Mr. Rajan, Mr. Senapati. Thank you very much for inviting me. It doesn't require much of an invitation to get me to Bangalore. It's my hometown. I was born and brought up over here, and it's always a pleasure to come to this beautiful city. What is amazing today, as I mentioned in my talk a little while back at the Hotel Capital to the Cost and Management Accountants, is on a Sunday, you're having such an important function. I would really say, in the context of Delhi, I will not say that anywhere else, but certainly it will be very difficult to hold a similar event in Delhi on a Sunday or on a public holiday. It's impossible. And I think it's a matter of great, it's a recognition of the professions here, in Bangalore. I understand there are almost about 9,000 members that you'll have of a professional fraternity of 2.2 lakhs, of which 50% are in practice and 50% in industry as well. So there's a very nice, healthy cross-pollination of professionals, both in industry and outside, seamlessly moving, and contributing through thoughts, ideas, applications as we go along in terms of improvements to governance structures. So, let me just say thank you very much, and of course I must mention Mr. Santana Krishnan. I think he paid some very kind words about my role in terms of the new companies law. I'll be very honest, candid, and open to say that I was only a member of a team which we often look at the people on the spot at that particular time, whenever something happens. But let's not forget that the envisaged changes, the new corporate law, started more than 10 years ago. And very often in history, and as a student of history, I always believe there are the unsung heroes, the people whose roles are lost and forgotten. But 10 years back, the Union Cabinet actually took a decision when perhaps the 26th Amendment trial. There have been 25 amendments to the earlier Companies Law of 1956. At that time, they said enough is enough. If we have to amend, let's go in for a complete, comprehensive modernization rather than to amend in piecemeal manner. So really it goes back to 2003, but serious work started only in 2007, when I think the respected Mr. J.J. Irani's committee report came, which formed the basis of the first draft of the Companies Bill that was drafted and presented in 2009. It went to the Standing Committee of Finance, and they came up with some very good recommendations. Most of it were absorbed. It got translated into the new, it was then called as the Companies Bill of 2011, went back to the standing committee. They came back with more recommendations which were accepted by the government. And therefore what you see is really an interplay of productive forces from the corporates, from the professional institutes, within the government and in Parliament. And the point I want to stress is that any major legislative change that can take place in our country can only happen when it's a participative, collaborative effort. Gone are the days when legislation could be framed in a manner which was like thrusting it down on we the people of India. It doesn't work out anywhere at all. It doesn't work anymore at all. We are a participative democracy. We may be a dysfunctional democracy. We may be a argumentative Indian. Whatever it is, I think it's the final credit should be given to the ethos of India, that we were able to work together. And I don't say this in a political manner at all, but underlying the success of the new Companies Law 2013, in my view, it is the genius of India. The genius of India that comes from you all as professionals. The genius of India that comes through parliamentarians. It comes from government. It comes from the corporate sector. And everybody wanted to happen. And that's why I must mention, on the 8th of August, last month, when we trooped into Parliament, into the Rajya Sabha, it was scheduled for consideration and passage. 3-4 days before that, we used to troop in and out. Go in the morning, bedlam, shouting, adjournment in the House. Parliament was not transacting any business. We would come back to our office, go back in the afternoon, same thing happening. 3 consecutive days. And then on the 8th of August at 2:30, my colleagues and myself, we went in again. Mr. Santana Krishnan, of course, knows most of those details. Went in again, long face, is this yet another game that's being played? How many times can we keep going through these security restrictions as you enter Parliament House? But then suddenly something happened. We were suddenly informed that there was a 3.5-hour discussion and debate scheduled, which really caught everyone by surprise. It only showed, again, that the political class, while they do reflect, perhaps in some sense, the chaos or the disorder that takes place on the streets of India, but when it came to legislation, they set aside their differences. And they allowed a 3.5-hour discussion to take place, during which some very excellent suggestions were made by members, cutting across political parties. And finally, through a show of bipartisan support, Parliament passed this historic legislation. So really, in short, if I might say so, the credit cannot go to any individual or individuals. We may be here at a point in time sitting in a certain position. The office bearers of the institute, for instance. All of us in the government or in the corporates. But essentially it happened over a period of time. And we must recognize the role played by several people. Almost, I think about 5 union ministers of corporate affairs were involved in the drafting of this bill. An equal number of secretaries in the government, at least about 7 secretaries, Mr. Santana Krishnan. I think you've gone through it all. You've seen them all, isn't it? Working with all of them. So forget people like us as additional secretaries and joint secretaries and so on. But yes, we all had our role to play in moving this agenda forward. So that's something which I'd like to mention about the passage of this new law. The new act, as we all know, particularly promotes good governance through enlightened regulations, e-governance initiatives which Mr. Senapati referred to, enhanced disclosure norms, enhanced accountability of the management, stricter enforcement, audit accountability, protection of minority shareholders, investor protection, and a better framework for insolvency regulation. If there's one area which I do believe has not been addressed in this law, and my views are pretty well known, it's really in terms of a new bankruptcy law that perhaps this country needs, something like akin to the US Chapter 11 kind of a bankruptcy law, which we also need. And probably some of the evils or some of the problems that beleaguer some failed businesses, some failed corporates, there has to be a smoother and easier way of exiting. And that's probably something that is work in progress. Many of us are thinking on this agenda. We probably will need to have a separate law in this matter. And here again, the Institute will really be called upon to provide guidance, to provide leadership, and to sort of take this idea forward that India does need a comprehensive bankruptcy law at some point of time. An issue that couldn't be touched upon over here. The Companies Law also removes ambiguities, several ambiguities that existed in the 1956 Act. Now, while everyone refers to the 1956 Act, actually we need to go back, even earlier. It was really the change of the Companies Law of 1913, which really set in force whatever changes that took place in 1956 and 57 years later today. So actually you're repealing the essence of an act that owed its origin to colonial days when India was still not independent, and therefore it's a new law that is changing a law that actually started in 1913. The Act, the present law, is a balanced Act. It seeks to achieve a balance of all stakeholders' interests. Of course, there will be problems. There will be problems when you are dealing with or bringing out a new legislation. And the essence of rule making is just what I can say is deal making. In the sense you need to reconcile interests. But interests have to be reconciled with one higher objective, which is the national interest or the public interest. One cannot and should not look at provisions of this law in compartments, in silos, or in individual components. And that's my earnest request to the members of this very, very important community. That yes, there are many, many deep concerns which we will address as we go along. But we would only urge all sections to sort of take a more macro, comprehensive look of the totality of the intentions, of the legislative intent. Parliament has spoken. And we need to take into account the totality of those interests while framing rules. There is a great scope for providing simplicity, providing greater clarity to rules, and that's really the task that we have embarked upon. I must pay a word of great compliment, of great of acknowledgement of the role played by rules-making committee that we had constituted in the, to help the Ministry of Corporate Affairs. There are outstanding individuals, your own institute, represented by no less a person than Mr. Santana Krishnan, and there have been other members from the accounting fraternity, Mr. Ramesh, chairman of the Deloitte committee, who was along with me at yesterday's function, and many other individuals, professionals, legal experts, tax experts, minority shareholders experts, and several such experts who have helped us along. It's not that we conceived of these rules, in isolation. We had these vidwans, which I would call them, and great assets that has helped us move this dialogue forward. Mr. Santana Krishnan has fought with us sometimes. Why should certain issues be there? So did Mr. Ramesh, and so on and so forth. We heard them, we agreed on many issues, we agreed to disagree on many other issues. But there were always a purpose. Even if we disagreed as friends. We continue to remain as friends. And that was how the rules were formulated. And therefore it's a great, to me personally, it was a great pleasant experience, to work with some of India's finest minds. And you can certainly be proud of many leading people from the chartered accountancy profession who's played very, very important role. And I'd like to publicly compliment the leadership of the Institute of Chartered Accountants, people like Mr. Raghu here, Mr. Santana Krishnan, and in all your other chapters, there is leadership. I'm aware of it. And the whole country respects the role and the contribution played by this very, very important profession. There are tremendous challenges that are there in the years to come. There are some transitional periods. There's a transitional period of 3 years that's mentioned in the law. But as far as the rule making is concerned, I'd just like to make a few observations to some of the issues which Mr. Senapati referred to. He did mention about the adoption of electronic means of communication and the proceedings of the board. I totally concede his point. There is no need today, to show everyone's head or his bald head or whatever it is. Those of us who don't have much of hair. So let's be practical in today's world. What you need is really a summary. And I'm sure that's the only way that you need to go. It has to bring out the essence of what was discussed. That's about all. I mean, don't we know what minutes are and so on. But this is where, if you start front-loading the law in every form, then you find it very difficult to make changes. There are some legal experts who have criticized, You know, there's those provisions, I think how many times? There are 380 times the phrase as may be prescribed has been used. Now, some people, especially some legal experts, have actually criticized this and said, look at these babus. You know, this is where the babus wreak revenge. This is the time for them to take their vengeance on everybody. But that's not the case. That was never our intention at all. I'm not a legal expert myself, but all that one knows in legislation is that at times in drafting a law, it becomes necessary. You can't front load a law with every possible detail. And the reason why you shouldn't do it is because in case things change, you don't know how technology is going to take us 5 years from now. In what way will technology turn out 10 years from now? It can move. But if you start front-loading everything in the Act, then every time you go back to Parliament to go and amend it. So rule-making also provides for that kind of flexibility as well. That as and when society changes, the whole mental makeup of India, of professions change. You all will also change as you go along, as standards come along. And you have to be in sync with global standards. There are issues to do with the IFRS, which I don't wish to refer to. But there are those global changes taking place as well. And India needs to be in sync. India's corporates are reaching out. Corporates from outside are coming in over here. Therefore, we need to necessarily qualitatively uplift, raise, upgrade, strengthen our standards, not only in the profession of accounting, but equally in the auditing profession as well. Both are two sides of the same coin. That's a tremendous responsibility going to be placed on the newly created, or the institution to be created, the NAFRA, the National Financial Reporting Authority. So, the point, Mr. Senapati, is well conceded. I think all this should come, of course, in your constructive suggestions. While I would accept it, I think it's the most practical thing that should be done. So thank you for those suggestions. There are issues to do with the rotation of the whole thing of dependence and so on. I think it's most practical. You mentioned about changes in India's social relationship. It's a fact. Gone are the days when our societies, our families were governed by the mukhya, the joint family head, the boss, and then all of us all lived under that structure. But as India changes its profile, especially in urban India, into a more nucleus family, of course we don't take responsibility of the acts of commission or omission done by some close relative of ours. That's not the spirit of it. And this is where we need to bring in greater clarity in the rules. What do we mean by this? But it is the legislative intent, as I keep saying. Please look, the legislative intent was essentially that you need to be careful. But we got to be practical as well. You can't, bring in everybody and every act and every family member that you know in your family as part of your direct responsibility. None of us, it doesn't happen. So let's make the law on rule making a little more practical oriented and recognizing what exactly is, facing India today. Of course, I won't go too much into the extent of live-in relationships Mr. Senapati referred to. I wouldn't like India or India's morality, not that I'm a prude, but I don't think we need to walk that path of the Western world of live-in relationships and to recognize them, or of various other kinds of things. I think we have our own character and we can be proud of our Indian heritage and Indian culture, and we don't necessarily need to talk about live-in relationships. Certainly not. That's for the Western world. If they want to go and recognize that, good luck to them. Mr. Senapati referred to some other very important suggestions. The restrictions on investment in securities, independent directors, don't make them too onerous. I totally agree with some of your points. We will need to discuss and go along, and therefore your suggestions are most valued. I forgot to mention that we've already hosted this web-friendly software on our MCA 21 portal, which gives you a proper structure for giving us your comments, either as individuals or as firms or as or as an institute itself. And please dock in your suggestions on any specific area, and we can personally assure you, certainly on behalf of the Ministry of Corporate Affairs, that each one of your suggestions are valued. We respect it, we want it, and that's the process of consultation that we have put forward. Kindly do help us, and This is not going to, the final decision is not going to be taken by a bunch of babus, I can certainly tell you, however much we might be enlightened. We will run past this rules committee. Right now it's an informal based rules committee, which was actually constituted by Mr. Veerappa Moily when he was the Minister for Corporate Affairs. And the issue was, do you want to make it a formal based committee, or shall we sort of identify certain individuals who could be drafted in? Mr. Moily, in his wisdom, and we must leave it, at that stage. That is what he preferred, and that is the present composition of the of this rules committee that is there. There are several requests, demands, and letters written to our minister to say, let's formalize it, let's have it by institution and so on. All options are on the table, and the minister will certainly take an appropriate decision. I can certainly assure you that on behalf of the ministry. Yes, Mr. Senapati also referred to CSR. CSR in India has become something like cricket. I think everyone has a point of view on cricket. All of us are great cricket experts. So is the concept of corporate social responsibility. What is the message underlying CSR? That I think the clear distinction has to be made that this is not charity, that this is not philanthropy. Yes, Indian institutions, Indian corporates have had a long history of running charitable institutions, of conducting, philanthropic activities. And I can tell you that I think almost about 70 odd corporates in India today are accounting for CSR spends of something close to 1,550 crores already. So it's not that it's something new. There are several corporates running from the house of Tata and Birlas and Mahindras and ITC, public sector, BHEL and so on, who are already spending. It's already mandated. So it's not something that is a new idea that was fished out. It came through the womb of industry. It came from Mr. Irani that, yes, there's a lot more that can be done. But what is it for finally? It's back again, it's an investment back into social capital formation. I just made this example yesterday and today. When the state of Tamil Nadu in the early 1980s started the midday meal scheme, the chief minister of the day and the government was pilloried, was criticized, saying that it's just a populist measure. It's only to capture votes and to get votes. But please look at the results of that spending that took place essentially through that midday meal scheme. And I'm not saying it because there are enough and more professionals who have written about the quantum jump in the human resource index of Tamil Nadu in terms of literacy levels, in terms of education levels, in terms of health standards, in terms of nourishment, malnourishment issues. It's a quantum leap into investment into the next generation. And is it not good for corporates, I ask, that if you have a healthier workforce, you have a productive workforce, you have a workforce that has money to spend. India's population is already 65% of India is less than 35 years of age. And they are the ones who are indulging in big ticket spending. Put more money, create more jobs. Finally it comes back good for everybody. It's really a win-win situation, but it's an investment into the future. Now that's the way that we look at it. It's an investment in the future. It's a great leap into the future. It's a great leap in trust. The rules of CSR have been made very clear. The responsibility is on the corporate to constitute your committee, decide your CSR activities, implement your activities in whatever manner. If you don't have the ability to implement it, you can join up with others, trusts can be formed, etc. But please leave a trail behind as to what exactly has that 2% spent meant. Preference of course has to be given to the local area from where you're operating, so that identifiably people can see the buy-in. That if you've spent so much of money into schools, colleges, into dispensaries, into whatever it is, ultimately it's the buy-in of the people that gives you the brand. Brand can't come otherwise. Brand must come from a voluntary acceptance by the people of your activities. So it's really a slight tweaking to say that that's something good for brand India. That you're socially responsible as well. It's not just that 2% that you're spending. It's a leap in the future. It's something that you're doing for the people of India. And it's not a political message. When we modernize laws, you'll need to look at laws for not only for today, but you need to look at tomorrow. You can't continuously keep on framing laws. Laws don't change like that. So laws have to be modernistic and futuristic as well. And therefore you have to look at the emerging phase of India as well, not just what India is today. I think I've spoken on that, of course, and I really welcome, the Institute of Chartered Accountants' responsibility in preparing that guidance note. Is very important in how we account for those assets, etc. There are lots of issues that are going to come up, and it's for you all again to sort of provide that kind of leadership and guidance to corporates as well as to the government. We are totally dependent upon you all, as you all know, to provide us with that kind of intellectual accounting leadership. I absolutely agree with what Mr. Senapati said, that in the CSR spend, let's make this, the whole idea was to keep it simple. Let's not make it complicated in terms of, caste, community, religion. For too much, these are probably divided India and not so much brought things closer to us Indians. And therefore, your point is absolutely valid, that these are, it's nowhere in the agenda, at least at this point of time. And I'm sure that enlightened leadership will ensure that we should cut out all this and let's stick to the basics for what its purpose is. The social sector, education, health, literacy, malnourishment, vocational skills, and so on and so forth. These are the main activities that we'd really like to see the quality of CSR spends. 2-3 other issues Mr. Senapati referred to: multi-layer of subsidiaries, the rotation of auditors and related party transactions. I really wouldn't like to go more into details, but I can certainly assure you, and I can give you my solemn assurance, that your suggestions will be taken on board. We will, to the best that we can, reconcile differences and bring about greater clarity in this. We will certainly attempt it. We'll do it. And that's my open assurance to everybody in this house, that the government will look at it in these manners. And please do come out with your constructive suggestions. A final word on cost audit provisions. Mr. Senapati referred to that the scope and the coverage of cost audit should not necessarily mean a greater coverage. This has been discussed, debated several times in the Rules Committee, of which I have myself been present. We've had differences of views, but I concede the point that we need to have great clarity insofar as what cost audit ought to cover. Does it have to cover the chappal industry or the footwear industry or some small industry? For what purpose does it serve? Let's look at the 80-20 principle. Where should 80% of our attention, what kind of information should be preserved? What kind of records need to be preserved? I think that's really going to be a great test insofar as on the cost audit, Mr. Senapati, I can assure you. And we will do our best when it comes to this important issue. So, ladies and gentlemen, thank you very much for having given me this opportunity to address you all. I know it's impossible to talk even 15-20 minutes. I've just spoken for 45 minutes in the other function. But we should meet more regularly as we come out with the rules. At some point of time we can have, probably not on such a huge matter as the entire gamut of the legislation, but perhaps on focused areas we could have, smaller level interactions and so on. And the whole idea is to take this message forward. And once again, thank you very much. I think there's a great future for the profession of the Chartered Accountants in India, and especially the Bangalore chapter. I'm very, very partial to it. But I'm sure that today, Sunday, is not a wasted day for you all. God bless you. Thank you.
So thank you very much for showing a lot of affection to Bangaloreans. You being a Bangalorean, we are also very proud to say that a Bangalorean is leading the rule-making body, and we are very happy for that. And also, when it comes to the matter of professional interest or for the stakeholders' interest, Institute of Chartered Accountants of India will fight tooth and nail so that we'll get justice onto the board, sir. Sir, we'll have a quick reaction from our Vice President on the message that you are giving to us, sir.
So we are extremely thankful to you, Mr. Joseph, for having joined us for today's interaction session. And I have seen Mr. Joseph working very closely in Delhi whenever we visit the Ministry of Corporate Affairs. A very simple person, very friendly, humble. He is from Bangalore. Gives me all the more comfort to interact with him, discuss with him, debate with him. And we are very happy, sir, that Mr. Joseph, you have been very kind to the Institute. Your good words and appreciation for the members of the Institute and our profession is really laudable. Yeah. Just I thought, Mr. Joseph, just before you came, I made my presentation on some of the concerns of the Institute, the concerns of the profession. Definitely I would not want you to react right now because I know you are looking for a lot of feedback from across the country, but I thought I should choose this occasion to quickly give you 7 of our concerns which we as a profession, we as an institute would like to place before you. The first one is on audit rotation. Sir, globally, audit rotation has not been a big success. Whenever we represent at various international forums and when presentations are made about audit rotation, we find that it's not a very big success, and I would like to compliment you for having taken the lead. India has taken the lead to bring in audit rotation. But my only request to you, sir, we need to selectively ensure that audit rotation is restricted to only public listed companies. We need to test the waters and then decide whether we should make it applicable to all the companies at large. That's issue number 1. Sir, as far as the cap on audits is concerned, 20 audits is concerned, we as a profession, as you know, India is a country having a large number of small and medium practitioners. So we would want to see that the private limited companies and one-person companies are kept away from the cap on 20 audits. Yes, the rules have yet to come, but we would like to make a request to you that the cap on 20 audits, you should restrict it to the large size companies, and private limited companies and OPC should be out of this cap. Number 3, voluntary revision of financial statements, a big concern for us, and we as an institute have formed a group. We would like to give our suggestions, and we would request you to please consider this on issues considering voluntary revision of financial statements. As far as fraud is concerned, definition of fraud, there are certain grey areas. Again, we would be coming back to you as to exactly say what would be our role, what would be the role of our members to comment on the frauds committed on the management, committed by the management, because there are some grey areas, what has been stated in the Act, what has been stated in the rules. We will come back to you, sir.
For the first time, fraud has been defined.
Yeah.
You also say that what is fraud?
Yeah, we mentioned that. And as far as NAFRA is concerned, we are very confident. In fact, Mr. Sachin Pilot was few days back when we were with him. He told us very clearly, Mr. Raghu, the institute is a part of the Ministry of Corporate Affairs. You are a creation of our ministry, and you need not bother about NAFRA. NAFRA would focus on all the matters concerning frauds taken place in case of big companies, large size companies, something on the likes of Satyam or Reebok, the big ones we would like to investigate. Definitely we would like to see that the institute would continue to perform its role. Currently, considering the fact all the disciplinary mechanism is with the institute, accounting standards, auditing standards, he said we would definitely like to see that you continue with all the good work you're doing. We would focus on only certain large size issues, proceedings that are taking that we would like to take. Large size companies that members of our institute are actively associated. But yes, NAFRA, there are certain concerns which we would like to separately inform you, sir. As far as the 6th one is concerned, format of financial statements for small companies, we would also come out with our suggestions to what should be the format of the financial statement. We want it to be more simpler. And finally, 7th one is auditors not to provide non-audit services that has been listed out by you. We also have a restrictive clause for our members where they cannot take up certain kind of activities. We want you to have a look at it, and when rule making happens, we would like you to consider all these suggestions. I think these are some of the suggestions which we thought we would like to place before your August in front of you, and we are extremely thankful to you, sir, for having joined us today, and we're really happy for the kind of support you're extending to us. Thank you very much.
Sir, I hope I won't be repeating what the Vice President has already said. Prior to our meeting, we wanted to be very short and brief, and therefore we had taken the views of the members assembled here, and they also represent their corporate clients and others. First is when the Act itself has taken 5 to 6 years, when the rule making has taken so much of time, giving us 30 days time is absolutely unfair to us because no one can read the entire rules in 30 days and give you an opinion. Particularly when you have taken from 2009 to 2013 to enact an enactment. To say these rules will have to be studied, particularly this profession has got the responsibility of tax filing, etc. They have another statutory responsibility for their clients. They will have to finish it. So we request, I'm saying this on behalf of, not my view, sir, it's the members' view because they had expressed it earlier. I thought I'd express it to you on their behalf. We need another 30 days of extension of time and 45 days every time you expose it. Coming back with a surprise at a particularly this point of time, it's very difficult. I'm sure you will take this. They may not find it easy for them to make a separate letter to you, but I represent the profession in this part. Second is, on, of course, rotation, we had very clear that we needed the private companies to be excluded, which I think you have agreed. I'll go on a broader perspective, sir. We have identified several clauses in which have not been drafted well. We appreciate that you cannot go back and nothing can be done. But don't you think that we should have a white paper on it, so the next possible time we should go and make these amendments, sir?
In fact, I even request you.
Yes, sir.
I even request you to please see, can we invoke 470, how to remove difficulties when it comes to, if there are drafting errors. That's precisely why section 470 is there. Can you all kindly have a look and see whether we can address those issues using the existing 470, or should it only be through the rules?
No, sir. We have invoked in the rule-making committee wherever possible 470. In fact, we have used it extensively as they have used, as may be prescribed. But the point is there are certain things which have crept into the Act itself, which will have to be changed because the Act can't be amended unless the Act is amended. What I'm saying is we don't want to take a later on a discussion and then that goes on. If we can prepare an agreed white paper and give you a recommendation, that might be important. And the third is there are going to be several implementation issues, particularly SFIO has been given a sweeping power to arrest. It's actually like a CBI when it comes to financial statements. That's something which you need to look
I will
at,
quickly address that. In fact, that's been uppermost on our mind.
Yes.
Yes, the SFIO has been given in exceptional circumstances, and in fact, adequate safeguards will be built into it. It's dangerous to have that kind of power being unleashed on anybody, certainly not you and me at least. But therefore, there has to be, you need to ring fence these such powers with careful rules on what circumstances, who can order that arrest and so on. So that is certainly uppermost on our minds.
The other one is not only impinging on the rotation, generally you find that this country has got many, many small and medium practitioners. I think that when we talk about inclusive growth in banking, it's also required to have inclusive growth amongst the professionals. They are not large firms. So government needs to do something about SMPs. This is also connected with this. This is the popular request from the members to you, sir. While you have put several responsibilities on the chartered accountancy profession, we need to publicly recognize in the Act, the LAFRA constitution goes against it, but we need to recognize that the chartered accountancy profession, we have agreed that it is an endorsement of the importance. That is why there are additional restrictions. We are happy about it. But there somewhere there needs to be a protection. More importantly, where is the protection for the auditors? I think while you are putting the responsibility on us, making our Caro longer, Caro was longer and Caro has become longer, but we don't see a kind of protection coming to the profession. To a very chartered accountant does the qualification. Where is that qualification going? There is no, these are actually implementation or I would say administrative control issues that are lacking. Otherwise the profession cannot discharge its responsibilities, sir. For example, in the case of fraud, why do you want the auditors to report? Why don't you ask the management to report? But where is the auditor coming in a fraud which he identifies? Sir, I am pointing out to you today, there are several, maybe many of the members are not aware. CBI is arresting the auditors or filing charge sheet against the auditors. On the ground, only then you can say in connivance with the auditor you did it, therefore hook the auditors. Auditors have no financial wherewithal. The client will not reimburse the legal cost. All these are very, very important issues, sir. I think if you look as a parent to the profession from the ministry, you will address these things without even we having to represent you. But these are very, very important issues, sir. I don't want to take more time. I think we'll take you one more opportunity to talk to you again, sir. Can I request Ms. Krishnami to come and say a few words? Sir, he's one of our most senior-most and wonderful professional that we have. We are blessed with his presence here. I thought he must talk for a few minutes, sir.
Thank you, sir. My first word of congratulations on the birth of the Companies Act 2013 after a long wait of labor pain. And thanks to the excellent midwifery by a group of secretaries, including your good self and our institute council members. I will only make a few points. First is on section 24 of this act. Section 24 is a delegated legislation. It says that in respect of issue and transfer of securities of listed companies, SEBI will administer the same under section 24. This is a restatement of section 55 of the present act. Section 55 has already generated a lot of litigation, as in the case of Sahara. Now, in the background of Sahara case, we should have improved upon the restatement in section 24, saying that in respect of breach, even unlisted companies will come under the jurisdiction of SEBI, which has not been done. You have simply said SEBI has jurisdiction only on listed companies and not on unlisted companies. If an unlisted company commits a breach of the fault lines of private placement, then it will come under SEBI according to the Supreme Court in Sahara case. So actually we should have taken care to ensure that in case there is a breach of private placement by an unlisted company, it will come under the jurisdiction of SEBI. This is the first point that I would like to make. You could have improved upon this and prevented litigation. After all, it's a delegated legislation. Section 158, you can issue a notification clarifying the entire position. The second that I would like to make is on section 132 NAFRA. The National Financial Reporting Authority. Now, it says that there is a notification will be issued establishing this authority dealing with accounting and auditing standards. The focus of PCAOB, which is the equivalent of this organization in the US, and which is a creation of the SOX Act, is that hereafterwards the emphasis must be not on internal controls as generally understood, but on what you call disclosure controls. On disclosure controls. What happened in the case of Enron was the books of accounts were perfectly right. There was nothing wrong with books of account. There was nothing wrong with internal controls. All that was wrong was reporting on what they received, $5 billion received from the subsidiary companies was shown as deferred income. There is nothing wrong. So therefore, the SOX Act was enacted to ensure that auditors conduct a due diligence or a validation procedure in respect of what you call disclosure controls or external controls, not internal controls. Now you have defined financial controls. As far as director's responsibility statement is concerned, all that you should have done is, and Mr. Santanakrishnan said, auditors must be protected. How can auditors be protected? Auditors can be protected only if a proper environment has been established in the company. Section 404 of the SOX Act refers to what you call a management assessment of internal controls over financial reporting. Internal controls over financial reporting. Therefore, what we require is, I can audit the accounts of a company in a very healthy environment. And a healthy environment is created when management alongside chartered accountants act in concert to provide the necessary environmental context. So therefore, what I would urge is, when you bring out a notification, you must make it clear that the mandate of this new organization, NFRA, will be on disclosure controls. Disclosure controls. You have defined financial controls in director's responsibility statement. There is a reference to financial controls in 177 in audit committee, but the focus must be different. Focus is not on the traditional internal controls. The focus must be on reporting. So take the case of Enron, take the case of WorldCom. In all these cases, the accounts were perfectly right. What was reported was fraudulent. What was reported was wrong. So what is required is due diligence at the time of examination, validation procedures, whether the assets exist. For example, in the case of Satyam, I should not repeat this case again, $1 billion being shown as cash and bank balances which did not exist. So therefore, PCAOB today is concerned with the existence of assets on your balance sheet, whether they exist or don't exist, whether the value ascribed to them is right or not right. Lehman Brothers simply disappeared because when somebody valued its derivatives on its balance sheet, the value was nil. And therefore, what is very important for the new organization, NAFRA, will be to address disclosure controls or external controls, not internal controls. This is the second point that I wanted to make. The third is about the auditing standards and accounting standards 133 and 143. We are happy that the onus still will be on the Institute of Chartered Accountants. There are still areas where auditing standards have not been produced. When PCAOB was created, the first auditing standard that they created was AS2. AS2 was internal controls on financial reporting. So therefore, we need an auditing standard on internal controls on financial reporting. Next, 177. 177 deals with the constitution of the audit committee. Now you have a parallel, dual legislation in 49 of the listing agreement. Dual legislation. All that you should have done is, you have now created a whistleblower protection committee and you have also a remuneration committee. Now all that you should have done is, now you have a concept paper on corporate governance issued by SEBI. You should have coordinated and left the enforcement of corporate governance entirely to SEBI. Today nobody controls your corporate governance. Nobody enforces corporate governance. Now, the new committee, NAFRA, must also be entrusted with not only examination of the accounting and auditing standards, but the entire gamut of financial reporting, which includes corporate governance, management discussion and analysis report. And section 211 of this one. Section 211 is with the fraud office. Now, fraud office can investigate all cases referred to it by listed authorities. In that, auditor is not included. Whenever there is a reference to fraud, you say fraud reference must be in the audit report, and he should report. But as far as the fraud office is concerned, now there is no cognizance taken of a report made by the auditors. There is an omission in section 211 on at whose instance investigation will be started, not on the basis of the auditor's report. So that I think these are the points that I wanted to make. Thank you.
Well, on behalf of the Bangalore branch, I profusely thank Mr. M.J. Joseph for having accepted the invite and come here and shared his thoughts on the New Companies Act and the rules that are in the offing, and also all the members who have responded to our call in this particular time, as this is a busy schedule for us. I request at a very short notice, I request our Vice President to please present a small memento as a token of our affection to the Additional Secretary, Government of India, Ministry of Corporate Affairs, Sri M.J. Joseph. I request C.A.K. Vishwanath to please come forward and present a memento to Suresh C. Senapati. Vishwanath. Memento. Well, members, thanks a lot for joining us at this very short notice. We'll reassemble at the canopy for lunch. Thank you.